Hi everyone. As a lot of people take stock of the last 12 months, we put together what we're calling the Property Investment Essentials episodes from the Property Investor Tales podcast. These are our best ofs from 2023, containing many useful tools and tricks to help you navigate your own wealth journey. In this episode, Tabitha talks to Alison Newman in the second episode of Property Investor Tales, featuring Alison's story. Alison shares insights of her journey through adversity to success in securing a legacy for her children. So enjoy this very inspiring episode of Property Investment Tales, Stories from the Front Yard. And if you want to learn more about this topic and investing in property in Australia, make sure you jump onto our upcoming Property Investment Masterclass webinars. They're held Tuesdays and Wednesdays. Check out the link below for what's coming up in 2024 and find out how you can get started or build up your existing property portfolio.
I was kind of looking for inspiration. I didn't know that I was looking for a group that could actually help me on my property journey, but I was looking for inspiration about investing. And somehow my phone must have been listening into me, and I saw the adverts for positive real estate.
Yeah.
And so I had one of those information webinar nights, and I listened to that, and I thought, wow, that's along the same lines of what I want to do.
You're listening to Property Investor Tales, Stories from the Front Yard. Here's your host, Tabitha Bright.
Hello and welcome to Property Investor Tales, Stories from the Front Yard, where I get to speak to property investors from around Australia about their investing journey. My name's Tabitha Bright and I'm the head of coaching at Positive Real Estate, where we help people build wealth through property. With over 8,000 clients across Australia and New Zealand, there are some incredible stories to tell, which hopefully make your investing journey that little bit easier and will inspire you along the way. So my guest today is Alison Newman, and this is actually our second interview with Alison. Our first episode, which is episode number 6, and I thoroughly recommend you watch that before you watch the second interview with her, covers Alison's journey from adversity and violence to a place where she's having absolutely astounding success. We go through a property deal that she's just completed and settled on Monday this week, and the results that she's got from that. We go through the numbers in detail, and I think you'll find it absolutely fascinating, and we're all cheering Alison on based on her experience previously. Enjoy this conversation with the fabulous Alison. Hey, and welcome to Property Investor Tales, Stories from the Front Yard. My name's Tabitha Bright. I'm the head of coaching for Positive Real Estate, and we're getting pretty raw and real today. You'll see my background. We're actually in Tab's bedroom. And the reason for that is when I planned this interview to have another chat with Alison, to circle round and find out how she went with the property that she was putting her name down on and super excited about. And back in 2020, it would have been probably, Alison, wasn't it? Was it?
Yep, 2020.
And we always said we'd circle back round and find out what the results were, how she went with this off the plan. Lo and behold, I have builders in my house, and where I would normally be in my office with all my gear, we've got people with skill saws and hammers and all sorts. So you get me in my bedroom today, folks. So thanks for bearing with us. Now, Alison, if anyone has seen Alison's original podcast episode, then you'll be very familiar with Alison Newman. So single mum at the moment, has got quite the story, survived something pretty epic and horrific, and she's popped out the other side and rebuilt her life. And so if you haven't seen that story, I'm not going to tell you much about it because today we're focusing on moving forward and what Alison's created for herself. But it is episode number 6. So it's one of our earliest interviews, and I thoroughly recommend that you get on and watch it because Alison's been we're very privileged to have Alison share that story, and it's incredibly inspiring for everyone out there. Today, Alison is a single parent, so she's on her investing journey, and she is responsible for making sure it happens for her and her kids, and she does a phenomenal job. So to go back a tad, Alison joined in March 2020, joined with Positive Real Estate. She's part of our mentoring program. And she already had a house in Queensland. Now, she was living in Adelaide at the time. Her work took her there. She's a house in, house in Queensland, a 4-bedder in Warner that she has turned into a investment property. And Alison, I'll let you take it away from here. So you were in Adelaide. It was 2020, and you knew you needed to change some stuff. So what did you do?
Yes. Well, I mean, I think I've always been looking for the right tribe to be around. But when we were in lockdown, I thought, right, well, I've done the first property.
Yeah.
I've got that. I bought that one at a discount. The couple were divorcing. They wanted to get rid of it quickly. So I was lucky enough to get instant equity with that one at the time.
Awesome.
The pandemic hit, and I thought, right, I've got to get back to doing what I love to do. And I was kind of looking for inspiration. I didn't know that I was looking for a group that could actually help me on my property journey, but I was looking for inspiration about investing. And somehow my phone must have been listening into me, and I saw the adverts for Positive Real Estate.
Yeah.
And so I had one of those information webinar nights, and I listened to that, and I thought, wow, that's along the same lines of what I want to do. Whereas most other companies will get you to say, well, you need to have so much in equity already, or the first thing we want you to do is go and set up a trust account, or you need to have a business, or something that didn't fit with me being a single mother, average income, who needed to get back on her feet again. So I did that, and then I did one of those free sessions where you could talk to someone, and I ended up talking to Todd.
Fantastic.
And he was great. And he was just no BS down the line. You can start wherever you are, you can start. So I thought, yep, okay, I can do this. We'll sign up and we'll see how we go. So that's how I got involved with Positive Real Estate. And I thought, well, I pretty much just wanted to get my money's worth. And at first it was just like, well, I better make sure that I'm getting something out of this. So what have they got to offer? Let's start tuning in. And it just became a habit. And then I just, kept doing it. And now it's just a part of my routine, and it's what I love doing, and all my friends are there. So I'm always on.
So what does always on look like? So take us through what your routine is engaging Positive Real Estate.
Well, wealth coffee chats. So with Jason in the morning, if he can make the effort in his day to get up and have all that information and, provide all of that, all I have to do is listen. So that's a really good one for me, to make sure that I've always got that time to listen and just switch on that investor brain and start thinking about my day and what I'm going to do and all that sort of thing. Occasionally, if he's late, I'm late to work, so I really have to watch the clock with that one. So I start the day with that. And then Wednesdays, you've got Sam Saggers does his Urban Property Investor podcast as well. So I always make sure that once a week that I listen to that as well. And I try not to let that fall behind also. And then, of course, you've got your Property Investor Tales podcast, so you can hear what all the other investors are doing and their stories and get ideas and inspiration from them. We've got Monday nights, we've got mentoring. So when do we do that every fortnight, or we do that every fortnight? Yeah, so we're there for that as well. So, and that's fantastic. There's always, new information, inspiration, and there's always property deals as well. So, which makes it hard, because you're always like, I want one of those, and I want one of those, and I want one of those. But...
there's definitely a lot of FOMO, for sure. But And it's interesting with the deals because sometimes the deal might be awesome, but it doesn't fit your strategy and it
Well,
doesn't
that's
fit your
right.
circumstances.
Yeah,
Yeah.
that's right.
But,
And then,
yes,
sorry, can't forget
go.
wine and wisdom either on a Friday night. You got to have a glass of vino on a Friday with with Jason and Andy as well. So that's always a lot of fun. So yeah. And then bus tours when they come up have been fantastic. Absolutely love them. Yeah, so and whenever there's events, if I'm in the area, then go to those too. So my gosh, it's a whole social gathering with positive.
Yeah, and look, and I have some clients that are very social like you, and I have some clients that aren't as social. But we do say, time allowing or create, as long as you can create some time for yourself to do it, the more engaged you are, particularly with the mentoring nights, I think it's so important that you engage, because if you can find that time, like I say to clients, like even an hour a week is all you really need to make sure that you're getting really good information and you're on top of everything. And we do see the clients that are engaged like yourself are the ones that get the really, really, really excellent results. And so tell us a little bit about that, because at the last podcast, we said we'd, find out where you got to and we'd do a follow-up. So
yes, I was a bit nervous last podcast about saying that, yes, I've got another one coming, because I still wasn't confident then about, gosh, am I even going to be able to settle this? Am I going to be able to get the finance? What's the market going to do? It was scary. So I'm so glad to say that it's settled now. Yeah, so I have a 1-bedroom, 76 square meters. It is a
blue 1-bedroom. Yeah.
It's fantastic. It's got the high ceilings, so the 2.7 ceilings. You can renovate anything, but you can't renovate ceiling height.
It's true.
Yeah, blue chip being Aria Riviere over at Kangaroo Point. I've got level 4 for my 1-bedroom, which means that it overlooks all the other. There's some 3-bedroom individual strata townhouses down below, so I get to look above all of that, so I can still see the mountains, the Gabba. I've still got river views, even though I'm south facing. Can see everything. It's fantastic.
And so tell me, actually, I'll go back a step, because sometimes we're nervous, like the coach wouldn't put you into something that they weren't confident you could settle. Now, sometimes there are things outside our control. And for you did have to back yourself, didn't you? You did have to make sure that you were going to do some stuff that had to happen in order for you to settle. Do you want to take us through what that looked like?
Yeah, absolutely. And look, just going one tiny step back from that, I wasn't even sure that I would do okay with a 1-bedroom. I had to have a very long transformational conversation with my coach that 1-bedrooms can still get excellent results. Because I had that bias that, like, no, you at least need 2 for one person, but no, this ended up being excellent. So,
and that's actually a really good point you make, Alison, that there are often a lot of preconceived ideas about apartments for investing and about 1-bedders in particular.
Yeah.
And I guess the key rules is that if you're going to buy an apartment, it has to appeal to an owner-occupier, because that means that there is future capital growth. Like, you can't buy investment grade stock for apartments. And when you're buying really good quality, then it creates demand. And it doesn't matter if it's an apartment or a townhouse or a house, it's that absolute blue chip. And Aria, for anyone that doesn't know them, amazing developer. And they've got quite a cult following. They have tenants and renters that follow them and rent out their latest, greatest building. And I've had people, when it was an 8% vacancy rate in South Brisbane, I've got a 1-bedder as well in my super, funnily enough. And I had like no vacancy period at all, even though it was an 8% vacancy in South Brisbane at the time. So, you know, it just goes to speak volumes for quality real estate. So tell us more about your property. 76 square meters.
76 square meters, 2.7 meter high ceilings. Balcony with river views. Just gorgeous. So,
and your balcony has a bit of a special twist to it, doesn't it?
It does. I've got the added benefit of common space that only I have access to. So there is, before you enter the unit, there's like the hallway, and then it's got the louvers, and then if you look out, there's like a big garden bed that's got it's got the irrigation and all the greenery, all the plants and all that. And when it needs to be maintained, they just abseil people off the 12 stories to maintain it. But you can only really access the garden bed unless you abseil or from my balcony. So I'm really that tenant for that unit is the one that gets to benefit from having that common area.
That's wonderful.
So it makes the balcony look huge. So it's really good.
Fantastic. So take us through some of your results, because you literally just settled that property when?
I just settled it on Monday.
And and have you got a tenant already?
I do have a tenant already. I do. So I settled on the Monday, and then the Tuesday morning. So it was the Monday afternoon, and then the Tuesday morning, I was the first investor to receive a call from Aria Living to say we've secured a tenant. And they have previously lived in Aria buildings.
Oh, there you go.
Absolutely immaculate history, and would love to move in. So I was like, yep, no worries, done.
Awesome. That's amazing.
Yeah.
So no downtime for vacancy for you, essentially.
Well, I've got 2 weeks for them to move everything.
To move it.
But not really much downtime. So.
Yeah. And so your coach has made sure that you've got a buffer, haven't they? So talk us through that.
Yeah. So look, I didn't have a buffer when I originally put the deposit down. As I mentioned, I put every cent that I had into it. I even went to the kids' piggy bank, and I think we lived off 2-minute noodles for about 2 or 3 weeks after that. So we really put every cent that we had, because I was confident that I had to get this deal, and then that's what I wanted to do. So I had to stop listening to everyone else saying it's risky, you're putting all your money into one thing. But I had a time strategy, which you learn through PRE as well. Yeah. So I knew that within the next couple of years, and I knew it would be 2020 or end of 2022, 23, it was meant to settle, that I was due for a promotion. I was due to get several more increases with my pay. Yeah. I had things around the house that I could start selling off that I didn't need. Yeah. So I knew that there were things that I could do, and I worked my numbers. I used Excel, and I went, right, I can still make the settlement. I can still pay the stamp duty, the legal costs. And if it doesn't quite come in, at valuation, then I've got extra funds that I can put towards that. Yep. And the other thing is I put down a 10% deposit. Yep. So I was hoping to get a 90% LVR, interest only. Yep. And I knew, well, if that was going to be an issue, maybe I needed to put in a bit more so that, I could pay less LMI. So I wanted to say that as well. So, yes, we've been living rather tightly and frugally for the, the last 2.5 years. So,
right.
Yeah, but we did it.
You did do it. And we'll talk about those results in a second. So just for the people that are coming up to speed with lingo, LMI is lender's mortgage insurance. So when you lend at 90%, then you pay a mortgage insurance premium, and it can be quite expensive. It can be a few grand out of your own pocket, sometimes 10 grand, sometimes more, depending on the price of the property that you're buying. And so if you can put more deposit in, then you pay less LMI, because it doesn't protect you at all. It's just all about managing the bank's risk. So It protects the banks. And we do want that because we want solid, solvent banks, but it still stings, right? Especially when you're, wanting to get on that property ladder and make every single cent count. So then tell us what happened, because you've got your buffers, you've got your LMI, you've got your solicitor's fees and your stamp
Yes.
duty, you're all set, you've saved hard. Did you get your promotion?
I did get my promotion, yep, and I'm heading towards my next one, so just slightly.
Awesome. And
I
so
did.
tell us the result of the property. Are you happy
Well,
with some numbers?
Yes, absolutely. So I purchased the lowest price point that PRE had with the 1 bedroom, which was $449,000.
Yep.
The new valuation when it came in,
The settlement.
Yeah, for settlement.
Yep.
My broker, when he rang me, he said, "Are you sitting down?" I said, "I can be." So I was out shopping at the time and I sat on the floor. And I thought, okay, it's probably a whole bunch of people looking at me, but that's okay. All right, let's go. And I thought, oh my God, it's going to come in under. Here we go. 520,000.
520,000. So
Yes,
how much
so we
of an
had a $71,000 uplift
on a 1 bedder
on 1 bedroom.
Before you've even held the property, you just
That's right.
on it. And for the people that might be a little bit skeptical, that is a bank valuation. That's not
Correct.
even a market appraisal. That is a bank valuation that is done independently of Positive Real Estate, of Alison, of the broker. The bank has valued that at $71,000 higher at settlement than Alison purchased at. That is awesome. So what does that mean for you then?
Well, it also meant that I now had an 80% LVR and I no longer needed to pay LMI. So I saved myself about another $8,000 on top of that.
Right. So you pocketed $8K.
Yep. So pretty much made about $80,000 on the deal like that. Well, not like that, but come settlement, I couldn't believe it. So that was just a godsend. And it also meant that lending was a little easier to get because we had those good numbers going only for an 80%. I have to remember too, as a single mother, the lenders will look at you and go, well, you've got dependents, they're expensive. So what you can borrow severely reduces. And I was looking to borrow after 12 rate hikes. So it was at the peak of being impossible to lend. And managed to get that through. So I had an incredible broker, David Wood, for Positive Money. And
he's awesome.
He was amazing. He was amazing. He just took care of everything. We had a few little hiccups. So we had the first lender.
Yep.
I won't drop names for lenders, but they changed their lending criteria at the 11th rate hike.
Yep.
So it was good though, because the way that David came to me to let me know that was he came in and said, hey, I've got some bad news about these guys, but this is our next option and I think it's going to be better. This is all the information on them. Are you happy to proceed? And I was like, well, bad news, good news. Yep. Okay, go ahead. There wasn't just that bomb of bad news. So it was very professional, very smooth. And it ended up being great with the lender that I went through for the 80% LVR, because I also managed to get a green home loan. So I got a discount on my interest rate.
So tell us about that.
So basically with the ARIA, they use a lot of sustainability. There's a lot of greenery in their developments. They've got solar power. They've got the Tesla battery storage, very eco-friendly. So, excuse me. So I had a NatHERS rating of 7.1 on my unit, which meant that I got a green home loan. So it was great. And I got interest only as well.
That is awesome, Alison. And so many people will not know that that's an option, the green home loans.
Yeah.
Yeah. Oh, you poor thing. Alison's had she's had the flu this week, and I managed to twist her arm to do a Friday interview with me. So thank you, darling. And what I love about you, Alison, is that, you know, you are so invested, pardon the pun, in making sure that you get a result and that you are driving forward. And I've got another client, I'll only use her first name, Stacey, and she's not dissimilar to you in that she is always in contact with me. Like, she books in with me just to check pretty much every month or every 3 months to check in. Has the plan changed? Has anything eased? At the moment, she's stuck in consolidation phase because she's maxed out with her servicing, but she is always like, what do I need to do? Am I still paying debt down? And she, for want of a better phrase, hustles all the time to understand what are the levers that we can pull to change her position. And I know that as soon as something shifts in the market, she will be there. She will not miss out on a second of the market. And you're very similar, because what are you doing now? You're already thinking about the next property that you need to hit your goals, right?
I am. Well, I've already started saving again. I have the rent that's come in.
Yep.
And I've taken my next position with work. I've actually put my hand up and I'm going to Darwin. So the reason I'm going up there away from Melbourne is because there's going to be a significant pay rise for me. So in order to acquire my third property, I'm looking at getting more money on paper and just gearing myself up to be able to leverage the next deal. So I'm hoping my third property that I'll be able to get that on my own. And then the fourth, I'm starting to do my research now and learn about co-investing.
Yes.
Yeah, so that's the plan.
Yeah, awesome.
Yeah.
And so just circling back to the ARIA property you've just settled, tell us a little bit about your rent yield, because it's great that you got an increase in the value of the property, but how about holding it in cash flow? Because there'll be lots of people out there that are, you know, going to be concerned about investing in this market with the interest rate increases we've had. But once again, buying quality property means there's more demand, which pushes the rents, which we've also all seen in the media are increasing quite heavily at the moment. So what was it originally?
Originally forecast to be around 425, something like that. That was in 2020.
Yep, 425 per week for that unit. Yep.
Yes. The next forecast rental appraisal that I got that went through to the lender to let them know what that income would be was going to be anywhere between 475 and 525.
Okay, good. Oh, sorry, I'm making you do this.
No, that's all right.
It's just such a good story. Yep.
But the way that ARIA do their marketing is they don't actually advertise unit by unit. So a lot of tenants, to get into an ARIA and that sort of blue chip development, is they have to submit everything. And then if they're suitable for the development, they will then see what's on offer and what works with them. So long story short, my rent ended up coming in at $640 per week.
640.
640.
Yeah. That is phenomenal. So let's have a look at these numbers. Yeah. So you purchased it for $449. 449. Okay, so 640 times 52. This is how we work out a rent yield, folks. Is 33,000 in income per annum, divided by the purchase price of 449. So that's I'm just going to work that out again because that seems way too good. And that's not me doing some marketing mumbo jumbo. I'm just going to do that again. 640 times 52 divided by, I want to make sure I got these numbers right, 449. I need to, well, good odd job I am sitting down, Alison. So it's a 7.4% yield.
I know. I had another positive real estate friend, Adrian, actually do the maths for me, and I did the same thing. I went, wait, we got to check that. Are you sure? Okay, do it again. Yeah,
it's the same thing. And tell me, what is your debt on the property?
At the moment, the mortgage is $395,000.
395. Alrighty. So I like to also work out the yield based on your debt because I'm going to hazard a guess this might even be cash flow positive for you. 640 times 52 divided by 395 is 8.4% yield on debt. So what that means, folks, without teaching some of you more advanced people to suck eggs, is what's your interest rate on your mortgage?
5.74 at the moment.
So, and because it's interest only,
it's only 5 years. Yeah.
Awesome. So Alison's paying 5.74%. Let's do some maths. At 395 times 5.74% equals. So her costs on the mortgage are 22,673, and her income is over 33. It was 33,200 and something. So that, my friend, is a cash flow positive property, which is really interesting.
Yes, I have depreciation as well, though. So I'm waiting on the numbers to come in, but I think the first year is probably going to sit around $10,000.
That's fantastic.
It's phenomenal.
That is amazing. And I mean, there's obviously other costs to pay. So there's body corporate, there's insurances, there's property management fees and all of that stuff. But being so far ahead there, what we normally say is when your yield is 2 points above what your interest rate is, and yours is nearly 3 points, then it's positive cash flow. It'll cover all of your costs. You know, for somebody that needs to save for their next property, that is locked in 70, 80 Ks worth of value already upon settling, you know, that's a fantastic result, hun. And I am, you know, good on you because you made it happen.
Well, the whole team made it happen. But it does feel like a lot of work that has been put in by myself, by Positive, by everyone, has come to fruition. So it's a really surreal feeling. If I didn't have a cold at the time, I'd probably be screaming from the rooftops. But
it'd be champagne with Michelle.
Yes, absolutely. Oh, and I did actually manage to go up to Brisbane from Melbourne and have a look, and it was great. Actually, Aria living, Dominique up there was fantastic. And when we got to the rooftop, I took a couple of friends with me to hold my hand, make sure it was real, pinch myself, and they did actually pop open a bottle of Moe. So we did enjoy some champagne on the rooftop and just
awesome.
those river and city views, and it was fantastic. So it was a really good feeling to know that all the stress and all the saving and worrying and all that, it all paid off.
That's amazing. But I am going to circle back round because, you know, one of the things we love about you is you're very humble. And yes, the team have done some great work alongside you, but it took your guts, it took your saving, it took your commitment, and it took, you know, your every day doing something towards your goal to actually make that happen. You know, there's plenty of people that didn't buy that unit, that didn't take action.
Yeah.
And hats off to you for committing and just going hell for leather, hun. You're absolutely yeah.
Yeah. The hardest thing was not listening to other people. So not listening to the other advice of people that had not worked out with real estate, or that didn't think it was a good idea, or you should never do off the plan, you should never buy one bedroom, nobody wants to live in those, all that sort of stuff. You just got to
tune out.
Tune out. And that's why I think too it's so good to be a part of a group where everyone's on the same page and everyone understands what you're doing and why you're doing it. So yeah, it was great. I'm stoked.
Well, we're super stoked for you. And you know, there are one betters that you wouldn't buy. There are developments you wouldn't buy. And there's probably a lot of one-bedroom apartments you wouldn't buy, but yours is very unique. We had a similar result for a client here in Melbourne in a development called Home in Collingwood, and I think it was similar. It was like 70, 80 square metre one-bedder. So for those of you, once again, that aren't familiar with square meterage in apartments, you're looking at a lot of two-bedroom apartments would be 74 square meters. You get some two-bedders that are 58 to 65 square meters. So, you know, Alison's got a really livable space. And then by the time she's got that extra balcony space and that greenery and everything, it is appealing to an owner-occupier. That's the big tick. And that's what's, you know, got her the result alongside Aria and their fantastic work.
Full-size kitchen, full bathroom. It's got that big, long shower. Everything's full size. It's got a lot of storage as well. Two big sliding doors that open up to the main bedroom. Like it's for one bedroom. I'm thinking, yeah, I could do this.
Yeah. And especially a lot of people, you know, are looking, people my age, us 50 and above, 54. I'm not even early 50s anymore, I don't think. You know, a lot of us are looking for the pad in the city, and then they have the bigger home elsewhere, or they have a place regional, or you know, it's all about lifestyle choices for people, especially post-COVID. So awesome job. Anything else that you wanted to share with the
well, just that I probably won't get to live in it because it's actually has a dual purpose. It's actually also for my 8-year-old, or maybe my 5-year-old, but it's for my 2 boys as well. And look, it's really about them and, you know, their inheritance, you know, legacy for them. And if one of my boys later on, you know, 10 years, 15 years time, whatever, if they decide, hey, Mum, I want to go work in Brisbane City, or I want to go study at QUT or anything else there, I say, great, unit's yours, you know. And to be able to do that as a mum is, it's a good feeling knowing that I can provide for them. Yeah, so that's really important. So, but yep, we'll celebrate this for a little bit longer and then we'll regroup. Work on money management, cash flow, make sure that everything's running smoothly, operating those bank accounts, everything moving where it needs to go, got money flying around all over the place, and then focus on the next deal.
Yeah, awesome. And for Alison, even though she has certainly done some beans and rice and those first instant noodles, I think you said, in those couple of weeks, you know, we all pick how committed we are. And if you want a result that is different from 90% of Australia out there, you have to choose what your commitment is to getting a different result. And for you, it was really knuckling down on budget. Now, you know, some people might go, I could never do that. Like, my day-to-day is too important. That's fine. It depends. Everybody is individual, but you don't get a result out of the ordinary without a commitment in some way, shape, or form. And you choose, like, talk to your coach about what your commitment is, what you can do, understand your trade-off. If you don't do that, you might be trading a financial future for later rather than your living experience today. And there's always going to be that fine balance. And on that note, you are off somewhere shortly.
So we are. Yes, as a bit of a reward, and I was only going to pay for it once the unit was settled and everything else was in place. For my kids, another thing off the bucket list is we're going on the Disney cruise in November. So just Melbourne to Melbourne, stop off in Tasmania. So another state I haven't stepped foot in before. So another tick on the bucket list. Yeah. So, and that's supposed to be, you know, like a blue chip luxury cruise. So the kids have no idea what they're in for yet. I can't afford to take them to Disneyland, but I can do the Disney cruise. So now that the unit's settled, that's all. The cruise has now been paid off and it's full steam ahead. So Yeah,
Oh,
happy
yes.
days.
Well, you can't afford yet.
No,
You know what? It's not that you can't afford, it's that you're making a choice to put it into something else for future security.
Well, that's
But
right. That would be a whole deposit.
yeah. But in the interim, you are ensuring that you are still living life today and you're peppering everything you're doing on your journey, which is what I love, with rewards and experiences. And you're just being really deliberate about where you spend your time and money. And I think
Yes.
that's the key to success, hon. And I think you're amazing.
Oh, thanks, Tab.
Awesome. So, anything else that you wanted to add to wrap up the full Alison Newman story for now?
Oh, I don't know. We're just getting started.
I'll circle around in another couple of years and we'll talk about your next one.
Another couple of years. Yep, let's get some more under my belt first. So
Sounds
not done
great.
yet.
Thanks for your time, honey.
No worries. Thanks, Tab.
Bye.
Bye.
Hey, thanks for listening to Property Investor Tales. Remember to subscribe so you get notified every time a new episode drops. As you can guess, I love hearing people's property investor tales. So if you'd like to share yours, then please get in touch with me via email at propertyinvestortales@positivementor.com.au. We would also love your feedback and I would appreciate a 5-star review over on Apple Podcasts or Spotify. Remember, you can watch all of these podcasts over on YouTube at Positive Mentor or at positivementor.com.au. Until then, take care, happy investing, and bye for now.